G'day and welcome to the War on Tether. Today I want to talk about how taking profit in Bitcoin could cost you everything. Now I know a lot of people would hear this statement and think I'm a Bitcoin supporter who's going to say fiat currency is worthless and taking profit into something that's worthless could leave you with nothing. Well, that's only half true. Now I'm not a Bitcoin hater, it's a beautiful idea, but humans have a tendency of destroying pretty much anything of beauty, and unfortunately, willingly or not, Bitcoin has adopted many of the less desirable characteristics of the very economy it was designed to escape. Greed, manipulation, power struggles, and a market inflated by a fractional reserve. These fiat-like characteristics now run rife throughout the crypto economy. But now let's get back to the title of the video. How taking Bitcoin profits could cost you everything. Many people who hold Bitcoin and wish to take profit do so by trading into a stable coin. This is a coin tied to a physical asset, usually a currency. They do this as a way of avoiding the fees of entering and exiting the crypto economy. And there are some stable coins that appear to be on the up and up. They are audited regularly by reputable firms and release financials to the public. But even these coins might be risky, and I'll explain why a little later on. But if you are taking profit in USDT or Tether, that's a very dangerous game of chicken you're playing. One that has the potential to end very badly. For those of you who are unaware, Tether's cash equivalence backing has become a bit of a joke to crypto enthusiasts and skeptics alike. In the interest of keeping this video relatively concise, I'll go into more detail in future videos. But for now, let's just say it's somewhat questionable whether Tether has the reserves to fully back the amount of Tether tokens it has in circulation. What this essentially means is that if there ever was a run on Tether, an event where Tether holders tried to cash in en masse, there simply would not be enough US dollars to meet the demand. This would cause downward pressure on the price of Tether and see it trade further and further from its one-to-one peg with the US dollar. So what does this mean for Bitcoin profit takers? Let's say you were to buy one Bitcoin at $50,000, because buying at all-time highs usually works out great. It's a good way to make money. So you buy this Bitcoin at $50,000 with a plan to sell it for $75,000. You buy it on Binance and you set a sell order for $75,000 USDT, Tether. You think you're being responsible. You wake up one morning and the trade is executed. You now have 75,000 Tether in your account and you're feeling just a little bit smug. You turn on your favorite crypto YouTuber to give yourself a bit of an extra pat on the back, only to see Bitcoin is still trading at $50,000. It turns out that Bitcoin hadn't moved at all, but Tether's price had halved overnight. Now instead of having one BTC, one Bitcoin valued at $50,000, you have 75,000 Tether valued at $37,500. And that's only if Tether dropped to 50 cents. Make no mistake, it is possible for Tether to trade effectively at zero. Don't be the one holding the Tether bag. So what about legit stablecoins? Better, but still not great if you're keeping it on an exchange. The simple fact is that most exchanges are not decentralized, and some may be carrying exposure to Tether. It is possible that Tether's collapse may cause the insolvency of some exchanges. If this were to happen, access to accounts would be frozen, with no chance of account holders ever retrieving the full amount they held at the time of insolvency. I'd like to close with a thought of the day. For those of you who are getting into Bitcoin in an attempt to flee the relentless overprinting of the currency that underpins fiat currencies globally, the US dollar, I keep hearing the same stat being touted in Bitcoin's defense. 40% of all US dollars were created in 2020. Well, here's a sobering fact for you. Tether, the currency that underpins the crypto economy, has seen a 1.9 million% increase in the 4 years from 2016 to 2020. Referring to this article written in November of 2020, which states the Tether market cap at the time of $18.5 billion, and using coin market cap for today's market cap, where it's at $32 billion, crunch a few numbers, and we find that 42% of all tethers came into existence in just the past 4 months. This actually makes the printing of the US dollar seem restrained in comparison. Maybe something to consider if you're only buying Bitcoin as an inflationary hedge. Until next time, this is Tethersis, bringing you the war on Tether.